Hello, welcome to this channel, Accounting Basics. Don't forget to subscribe, share, like and comment. In today's video we're going to look at assets. What are assets? Different types of assets, how we handle assets in accounting. What are assets? An asset is something owned by a business entity that will provide future benefits to the organization. That's an asset. And an asset is very important in any business. As you can see, assets run day-to-day business categories. We can see we have current assets, liquid assets, fixed assets, amortizable assets, real assets, tangible assets and intangible assets. Looking at examples of assets, in general we have land, building, inventory, equipment, goodwill, cash, bank and prepaid expenses, or you can call them preliminary expenses. Looking at current assets in general. Current assets are assets which are short-lived, usually limited to a particular financial year. Looking at futures of current assets. Current assets can quickly be converted into cash. You can quickly convert them into cash. The principle of conservatism is applied for evaluation of current assets. You cannot anticipate for profits in current assets. You just have to value them at that value, at their value. It provides benefits within a period of time. So current assets provide benefit within a period of time. Examples of current assets, we have cash in hand, the money you have, cash at bank, the money you have on your bank account, supplies in hand, what you've been supplied with, merchandise inventory, prepaid expenses. Prepaid expenses, these are expenses you pay in advance. For example, you pay rent for 15 months, meaning the 3 months are prepaid expenses. You paid it in advance. We have advance to employees. You give them an advance. That is an asset because they will have to work for you. Short-term investments, accounts receivable. That is the money you receive from your debtors. Those people you give goods on credit. Notes receivable, that's a current asset. Then we go on to look at liquid assets. These are assets which can easily be converted into cash. Liquidity, that item that can easily be converted into cash. For example, cash in the hand, cash at bank, notes receivable and marketable securities. So we go on to look at fixed assets. What are fixed assets? Fixed assets can also be called non-current assets, and these are assets that are collected for a long-term period of time. Such assets can be used for a business from 1 to 2 years or to 100 years. So non-current assets or fixed assets are used for a very long period of time in a business. And some of their features are: fixed assets provide benefits for multiple accounting periods. So they go on bringing in more profits to the business for more than 1 year. So depreciation is imposed on them. They depreciate. Non-current assets depreciate. For example, a car, a vehicle. You may buy a vehicle right now at 10 million and you may find like the next year it is 8 million. It is valued at 8 million. That means the 2 million went on depreciation, meaning the car depreciated. We have fixed accounts, has a long life and a product is not sold. They have a long life. So you can say a vehicle can't be used for 1 year. It is most probably used for more than 1 year. Examples of fixed assets or non-current assets, we have furniture and fittings, we have office equipment, we have motor vehicle, we have plant and machinery, we have leasehold property, and we have land and building and delivery vehicles. Looking at that, we can also talk about intangible assets. Intangible assets, these are assets that do not have a real existence and which can't be touched. They can't be touched, but they are assets. For example, copyright, patent, and goodwill. They are recorded under intangible assets. Of balance sheet, we record them as assets. Now I want to talk about, some of you may be asking why I talked about only fixed assets, current assets, and intangible assets. That is because in accounting we deal with fixed assets, we deal with current assets and intangible assets. That is something to do with the balance sheet. That is what we focus on in accounting, but they are all assets, and if they are noticed, you have to record them under assets. Assets have a debit balance, and if they are increasing, we debit. If they are reducing, we credit. That is something to do with our ledgers, journals. Dealing with final accounts. Assets have a debit balance. Thank you for watching this video. Don't forget to subscribe, share, like, and comment. Accounting Basics. God bless you.